You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. Bitcoin, Ether, Ripple, Litecoin, and more. Cryptocurrencies and other digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity, provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week, we'll break down the latest trading activity, trends, and developments on everything from coins to tokens, futures, and even OTC options. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. Now it's time to dive into the exploding world of cryptocurrencies and digital assets. It's time for the Crypto Rundown.
All right, everybody. That music can mean only one thing. It is time for the Crypto Rundown, the program where we break it all down on the crypto side of the fence. And man, oh man, is there a lot to break down this week. The question you guys have been asking us for so long, we finally have an answer to new players coming on the scene. A lot to sink our teeth into. If you can't tell, I'm excited, listeners. Of course, my name is Mark Longo from theoptionsinsider.com, as well as, of course, on the ever-exciting The Options Insider Radio Network. Glad to see so many of you are enjoying this. It still seems new to me. It's been going since the beginning of the year now. It still seems like a new show to me. The Crypto Rundown. It's because we have so many great new guests and new people coming on, and certainly so many great new listeners coming in and discovering the program. So keep it coming. Give us all the feedback. We'd love to hear from you guys. What you like us to do more on the show. All that fun stuff helps us to shape the content for you guys here on the show. And joining me to help me shape that content today, our old friend of the program and indeed the network, Mr. Bill ULIVIERI from Cenacle Capital Management by way of Athena Trade. We'll get him lined up here on the program as we keep on rolling right on into the Bitcoin breakdown.
It's time to explore the latest trading activity, trends, and developments across the world's leading crypto market. It's time for the Bitcoin Breakdown.
All right, everybody, welcome to the Bitcoin Breakdown. This is indeed the portion of the program where we break down what the heck is going on in the world of all things Bitcoin. And of course, we get to other cryptocurrencies later, like the altcoin. And I do believe, listeners, better late than never, fashionably late as always, we are joined once more by Mr. Bill ULIVIERI from Cenacle Capital Management by way of Athena Trade Chicago. Mr. ULIVIERI, are you there, sir?
Where are you guys today?
Yes, there he is. All right. Welcome back to the program. So you see, it wouldn't be the same if you weren't fashionably late, sir.
You know, I always just... The technology continues to underwhelm me, and it seems like all the tests go fine. You know, we're 5 by 5 by 5, and then when it comes time to call in, something happens. I don't know. I don't get it. So I'm working on that right now.
The magical mysteries of technology. But Bill, you picked a good one to join us today. There's a lot happening. We'll get to all the movements and shakings in the space in a second. But, the name of the show is the Crypto Rundown. Ever since CME and SIBO kind of raced each other out the door to list the futures back in late 2017, the question has been on the minds of our audience and certainly on our own minds. When the heck are we going to see some options? I remember we posted a poll, very infamously now for our audience there, in the hot and heavy days of January 2018. The futures were bright and brand new and fresh, and Bitcoin was hovering around 20,000, and it was just all sorts of optimism for all things crypto. And our audience, as they are wont to do, they leaned on the optimistic, maybe the aggressive side, and said, hey, we're going to see options by Q1 of 2018. I seemed comparatively the laggard, the dullard. I said, Q2 2018. And here we are coming into the heels of Q3, coming on to the beginning of Q4 of 2019. And Bill, for so long, we've said it. How many times have we had this question on the show? People have asked us. I have put it to CME so many times I've lost count. We've had Tim McCourt on the network many times, who heads up the crypto over there at CME. I've had Julie on our panel with us. So you name the CME person, I have put this question to them. So I have pretty much been an agitator for this cause for quite some time, but they are finally here. Yes, CME going to launch Bitcoin options with the caveat. They're here, but not quite here yet. They're announced now, but they're coming in Q1 of 2020. So Q1, that could be all the way out to the end of March, listeners. So of course we could have another 6 months if we want to be pessimistic about it. But Tim McCourt came on, or I should say he didn't come on. He should have come on TWIFO last week. We tried to get him on this week. Scheduling that stuff is always fun. But he said, based on increasing client demand and robust growth in our Bitcoin futures markets, we believe the launch of options will provide our clients with additional flexibility to trade and hedge their Bitcoin price risk. These new products are designed to help institutions and professional traders manage spot market Bitcoin exposure as well as hedge Bitcoin futures positions in a regulated exchange environment. One thing they did not do, Bill, in that press release was thank me personally, because, of course, I think we all know at the end of the day, I was the agitator that brought this to the surface. So I think what I'm trying to say a long way around, Bill, is you're welcome, sir.
We thank you. We thank you so much for that. And, no good deed goes unpunished in this world. So all the good work that you do is noticed by people like ourselves and your listeners. And the fact that they, responded. Listen, did it take 2 years longer than we wanted it to? Yeah, probably. But, all good things come to those who wait. And it has to be done just right with the blessings of the regulatory community, and to make sure that we have, all our I's dotted and T's crossed in order to make sure that we protect those people who enter our markets. And that's what makes it a beautiful thing.
Yeah, what's a year or two amongst friends, right? when it comes down to launching a new product. Was this a big topic of discussion over there at Athena this week? Because obviously you have guys in there daily, day in, day out, slinging the spot, and I'm sure some of the futures as well, maybe some of the options on some of the less regulated venues out there. Was the notion of having something that they could actually sink their teeth into on the listed side, was that a big topic du jour over there?
I think, it was expected in many ways, at least on the back burner or mid burner. I think the news that broke about the Bakkt exchange coming out with a physically settled futures Bitcoin contract, and I know that that's something you're going to touch on a little bit later. I think that was the news that seemed to stir the most excitement, was the physically delivered financial product, the futures product. So while kudos and applaud to the Chicago Mercantile, because they give it a tremendous amount of credibility, that coupled with the Chicago Board Option Exchange, even though they've kind of mothballed that product a little bit, we're that much closer to an exchange-traded fund. We're that much closer to being able to do covered call writing on cash-secured put writing strategies in our IRAs and 401ks. The concept of custody is really, really important for investor protection. So little by little, we're making progress in the right direction, and I think that's a beautiful thing.
It is a beautiful thing indeed, and I guess it depends which side of the market you're on this week, whether the price action we saw out there in Bitcoin was a beautiful thing or not. Either way, we certainly did see some price action. Coming into showtime now, we're seeing crypto trending on the downside again, off about 340-odd handles from our last show here. Actually trending off a little more now, down to about 98, 15, 16 or so. So off about 4 or 5 handles. So drifting down ever so slightly, coming in on that 350 level. Of course, it's been kind of a bit of an interesting week out here. Of course, we have a lot of news popping off that's been driving price action across the board. The high of the week actually came pretty much during our show last week on the 16th. Maybe there's a correlation there, Bill. I don't know, because we see a lot of high volume days in the options on our show days. We see the big price action a lot of times in the spot on our show day. Maybe a correlation. We're taking credit for a lot of things here on the show, but why not? It's a fun thing to do. Here at the high, 10,303. That was on last Monday, so our show day. Then it sold off pretty promptly. By Wednesday, it was trading back down to a little actually shy of where it is right now. It was at 98.07 down at the nadir there on Wednesday. And then Thursday, the 19th, it kind of just turned right around again, rallied back all the way up to over 10,000, 10,266, and then kind of just turned right back down again, back to where we are right now, right around 98.16, 98.17. Or so right now. So a lot of interesting action. Our friends over there, Crypto Patterns, they post some interesting blogs for us over there at the Options Insider as well, looking at the technical side of Bitcoin price action. They're saying that consolidation pattern continuing, with Bitcoin now testing the lows in the lower part of that range around the 9,500 to 10,000 level. But they said before that 9,500 level was pretty significant a couple of weeks ago. It bounced off that pretty aggressively. Last week it was the 10,000 level. It hit that and then immediately turned around. This week, it seems like it's testing new lows, maybe back around that 95, 100 level. They also pointed out, this has been an interesting topic. I've talked about with them before. Bitcoin actually, it's been so dominant of late. This week, it was actually fairly weak relative to altcoin, and they put in big caps. That means something. I'm not sure what it means, but it does mean something. And we're going to get into all the altcoin in a little bit. But, Bill, it's been a bit of a tumultuous week here from a Bitcoin price action. What's been catching your eye? What's been lighting up the tape over there in Athena land and Cenacle land over the past week?
Well, I think people are more and more cognizant and attentive to the technical patterns that we see in the marketplace. There's also a lot of conversation comparing the rally. Every time there's a rally in Bitcoin, we compare it to the rally that we saw back in 2017 and 2018, where how is the Google searches doing? Are people searching for how to buy Bitcoin, how to trade Bitcoin? Are they doing a search term for BTC, which is the symbol for Bitcoin, or is it the actual term Bitcoin? And so everybody's trying to figure out an analytic that they can judge and use as one more guidepost, one more mile marker, so to speak, in their decisions of when to buy and when to sell. Because nobody wants to pay, nobody wants to chase the rallies, nobody wants to sell into the hole, on the declines. So I think, every day that goes by where we see a little bit of volatility in Bitcoin is a good thing, because again, we're sharpening our metal. We're cutting our edge on this marketplace. Everyone, again, trying to figure out whether traditional technical analysis and stochastics, relative strength, MACD are working, or is it something else? Are there other analytics that we can be studying that give us an insight as to whether we should be leaning long, leaning short, or maybe begin eking out of our position? So again, everybody is paying probably more attention to Bitcoin price action now than they were before. Before it was just hold on for dear life, HODL, HODL. And, we're going to the moon, buy a Lamborghini, blah, 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 right? And now it's much more intelligent conversation. It's much more adult swim, where the adults are in the pool. And even if you follow crypto Twitter, you'll see that the conversation, in my opinion, which was boring about 3 or 4 months ago, is now actually getting good. So it's like really high-quality content's coming out there, and I appreciate that about how people are being more careful with their buy and sell decisions.
I like that analogy, the adult swim of the crypto market. I may have to borrow that, Bill. Hopefully your licensing rates are very reasonable. But I like that, in adult swim in the crypto. But I think there's something to that. And you mentioned the analytics and the metrics. We got a few of those for you guys to sink your teeth into, because I know you love them. Let's start off with the vol, again, on most of these metrics, courtesy of our friends over there, SKU, SK3W. They got great stuff. Sink your teeth into. If you're interested in these markets and you're listening to this, so I have to wager that you are, then sk3w.co is the place you want to be. Realized vol coming in a little bit again. It was 49% last show, down to about 39% today. Remember, that's 1 month realize, I think we were talking a little bit about 3-month last show as well. That's still high at 86, as you might imagine. That's much higher, but of course, 3 months, a lot's happened. The frame of reference there is a lot different. The 1 month, realize, where we like to sink our teeth into here, that's actually off a little bit, which is a little surprising given the fact that we have seen so much volatility over the past week. But again, that's a 1 month moving, lagging indicator. So there's a lot of other different data points baked in there. Speaking of data points, we like to look at the options volume. Let's lighten it up over there on DERIBIT, our barometer for how much value is actually transacting on a given day is usually around 30 million. North of that is a fairly active day. South of that, not so much. And there's only a few days really over the past week over that 30 million barometer. The 18th was the biggest day. Not surprising. We saw some good swings, 18th and 19th. So the 18th was 50 million, 19th was 43 million, and then the 22nd was about 37.6. Those are only real size days over 30 million. In terms of size and size prints, like we said, it wasn't a hugely active week. The largest, again, this is from contract size. This isn't from premium. Just looking at what the larger contracts are out there that are trading, the larger trade sizes. The biggest trade of the week, at least out on DERIBIT, was a 150 lot. So again, put these in perspective. Still not blowing the doors off. This isn't an Apple or a VIX or a SPY options, anything along those lines. But 150 lot of the OX 6,000 puts. Interestingly enough, going up near the end of October. 25th of October is when those expire. 150 of those were 0.001 Bitcoin. If you are indeed curious about the price, they went up when Bitcoin was at 10,059. So do a little bit of the homework there, and you can figure that out. Also, the DEES 28,000s. Yes, 28,000 calls. Paper selling those as well. A lot of selling of the wings, I'm noticing here, at least for the size trades. Those went up for 0.002 Bitcoin when Bitcoin was at 10,164. Again, 100 of those, as well as 100 of the someone else also selling to 15,000. So a little bit closer to the fire there. Those are in October when at 0.0055 Bitcoin. I still have a hard time quoting in fractional Bitcoin. Bitcoin at the time was at 10,067 when those went up. Looking at the term structure out here, it's pretty similar to what we've seen the last couple of weeks. The front portion of the curve actually is kind of the quietest. It's at about a 65 or a little bit less than that right now, coming into the tail end of September. Then it kind of ticks up going into October. By DEES, you're up to about a mid-70s, and you're above that. You're north of 75 by March. So kind of the inverse of the very backward curve we saw not too long ago out here. Now it's kind of the other way. In terms of where the options are lining up here this week in terms of calls to puts and open interest, the call to put down dramatically from this time last week. Last week was 55%, so it was pretty much a pick 'em calls to puts. This week, it's pretty much a put to call ratio. The call's only at 35%. That means 65% of the action out there in the call side of the ledger, or excuse me, put side of the ledger. So puts now lead in the dance out here. Remember, it hit the high, though, on the call side, 73, almost 74% back in June. So we are well off that, pretty much half that right now. Open interest, though, interestingly enough, growing. So up to about 641 million. That's actually north of the record we saw not too long ago. The record back in June was 635. So we're actually beating that. This is a new record level of open interest. I'll have to see exactly what the high was over the past week if it got any higher than 641. But right now it stands at 641, which at least for DERIBIT is a record for open interest. So new record open interest, and opening seems like to the put side of the ledger is kind of where we stand. Bill, is that kind of lining up with what you're seeing over there in the markets as well? Does that surprise you that maybe we're seeing vol come in a little bit, and also that we're seeing maybe A, premium harvesting trades dominating the tape, at least for size, and B, that it's mostly puts lining up on the OI these days?
Well, it's kind of what I see from my perspective. And again, everyone has a different way of analyzing their decisions, whether they want to lean to the long side or to the short side. On one hand, the more and more acceptance we see of Bitcoin in the institutional space and other derivatives coming in, like the physically delivered futures contracts, the potential for options, that leads me to believe that there's going to be some pressure on volatility, that the big players are going to come in and be more sellers than buyers of volatility. Because, again, on one hand, volatility is what drives us to this asset class. We have, the S&P 500 implied volatility is somewhere between maybe 13.5 and 15.5 these days. But with Bitcoin, Ethereum, Litecoin, we're in the 60s, 70s, 80s, and 80 plus. So that's a good thing. But I think we're going to see some pressure on the option side. And secondly, from my perspective, being a little bit more of an OG, old gangster, old guard, depending on how you want to use that term, Bitcoin, Ethereum, and Litecoin actually are at the bottom end of my matrix. I see those three asset classes actually underperforming silver, gold, the S&P 500, even the 13-week Treasury bills. All the Invesco currency shares like the Japanese yen, Swiss franc, Canadian dollar, all those I have into like this matrix that I look at. And over the last few weeks, we've seen those cryptocurrencies fall to the bottom end of the matrix. So right now, on a relative basis, I think I'm probably going to be a little bit more hands-off on leaning long, and because I think we're going to break this support area. Just as a technician, I think we're going to break the support, and that probably will cause volatility to decrease a little bit. So that's, it's everybody's got a different opinion, and that's what makes it a two-sided market.
That's what makes it fun, sir. And speaking of fun, let's see if there's any fun on the tape here in Bitcoin futures land over there on CME to kick things off. And a decently active day coming into showtime. Looks like about 4,500 contracts on that front SEP contract, about another 1,000 or so on the other. So you're talking about 5,500 contracts. Remember, that's a 5X coin. So a decent amount of coins changing hands. Over the course of the last week, it's been a little quiet. We saw about 2,600 on Friday, a little bit shy of 5,000 on Thursday, about 1,700 each day on Wednesday and Tuesday, and about 2,700 on Monday, the biggest day, of course. We mentioned last time, the day after Labor Day, all that pent-up action against when the markets closed for Labor Day, at least here in the U.S., driving a little bit of action there. There were a couple of interesting nuggets when CME announced their options this week in the press release. They included some interesting nuggets on what's going on with their futures as well. Really quickly, interesting stuff. Obviously, they launched back in DEES 2017. They had now 20 different expiration cycles, which I know that's the thing a lot of exchanges like to tally to make sure everything's working properly. More than 3,300 individual accounts have traded that product over the course of that time. Year to date, they claim in the ADV is nearly 7,000 contracts. Didn't see that last week, but I'll trust their numbers. That puts that they say the equivalent of obviously 35,000 Bitcoin. And also institutional interest growing. They say institutional open interest holders, a.k.a. large open interest holders, hitting a record of 56 in July. So everyone was asking that question, including myself, about what's going on the institutional side of the crypto fence. CME saying they're seeing some growth over there. Now, fast forward, there's certainly some growth in the futures market as a whole this week, because finally, after much ballyhoo, much dalliance, much brouhaha, much waiting, Bakkt is finally live. They executed their first contract, listeners, on Sunday at 8:02 p.m. Eastern Time, in case you want to get precise about it. And, of course, Bakkt, the big deal for a couple of reasons. First off, backed by ICE, a.k.a. the firm that also owns NYSE, so they have some wherewithal in the exchange space. Also, they have some capital behind them, including ICE, of course, and Microsoft, even Boston Consulting Group. So an interesting mix of partners there on the Bakkt side. And also, from a product perspective, interesting because they're delivering on the physical side, which a lot of people have been looking forward to for some time, a physically deliverable type future. You want a future that you can deliver into Bitcoin. That's what they're delivering. Their products are now, they have a daily and monthly futures contract. So interesting stuff. Bill, this is things people have been waiting for a long time. It sounds like this is what's been dominating the tape in your world of late. So tell us, why are you guys so excited about these new Bakkt futures and by ICE effectively getting into the crypto game?
Well, that's a great question, Mark. And again, this is just one person's perspective. And really, for my opinion, what keeps the entire futures and commodity industry running relatively smooth 99.9% of the time is the fact that a holder of a futures contract can take delivery of the underlying commodity. So, for example, at the Board of Trade, at the Mercantile, if you own one corn contract or soybean contract and you hold on to it long enough, and as it begins to expire, it moves toward the end of its life, you inform your clearing firm that you want to take ownership, and you can take delivery of 5,000 bushels of corn or soybeans. So you have to pony up, 5,000 bushels times the price of corn, and you get a receipt with your name on it, basically, and the name and location of the storage facility, the grain hub somewhere along the Mississippi that has grain in it, basically, with your name on it, right? And so you have to pay a little bit of insurance, you have to pay some other small administration fees, and maybe fee to keep it dry. But for the most part, you can hold on to the cash commodity for as long as you want. It's that conversion from a paper futures contract to the physical delivery that really keeps the game honest. And just like we saw when we were on the trading floor, there's the benefit of physical delivery also provides and promotes and supports and encourages arbitrage, because arbitrage really doesn't even exist without the potential of taking delivery of the underlying security. So, for example, when we were on the floor, and it was more common back then, although it's still very common today, if the speculative buying of the futures contract gets a little too ahead of itself, say in the S&P 500, you have trading firms that will buy the individual components of the S&P 500 and then sell the futures contract short. And they'll do that all day long. They'll do that in the morning and during the opening trade, right? And then by lunchtime, sometimes the future contract falls below fair value. So then traders will begin to unwind that position, and they'll buy the futures contract, and they'll sell the individual components. So this flipping back and forth between futures contracts and the underlying security is what keeps our prices and our commodities relatively near fair value. It prevents and discourages outright speculation. And there's even arbitrage between the S&P 500 big contract at the Mercantile and the smaller contract at the Chicago Board Options Exchange. So these things are kind of cash intensive, but it's done. And this is what makes things really run well. Even as former market makers at the Chicago Board Options Exchange, if you couldn't buy a call and exercise something that was in the money without taking delivery of the stock, like, what's the point of owning it? Like, there's no intrinsic, no legitimate investing value there if you can't exercise into the underlying security. So for me, I think this is a huge opportunity. This is a huge step forward where we're going to begin seeing an arbitrage opportunity between the underlying futures contract and the Bitcoin cash. And we even saw this a few years ago, if I can continue, Mark, in gold and futures. So we saw the futures contracts of gold and silver, maybe 3 or 4 years ago, if I'm not mistaken, maybe 2014. I'm not exactly sure the date, but if you went to a coin shop and you got a quote on a 1 ounce gold piece of bullion, it was 30% higher than the actual futures contract, or the implied price of, say, taking a look at the exchange-traded fund GLD. So there was a disconnect between the physical markets and the futures contracts. Well, little by little, that got worked off, and you saw more and more people open up accounts at small broker-dealer firms. They would buy a futures contract, take delivery, and then sell the underlying cash good on the market at their local coin dealer or on Craigslist or on eBay. So that connection between the physical underlying and the futures contract is, to me, one of the largest and biggest moves forward in this space, and then custody being like number 2. So I think that this is really, really, really important, not only just for the legitimization of Bitcoin as an asset class, but just in providing the integrity that the markets need and require and demand going forward.
So the physically settled is really what you're excited about, even more so than, let's say, the imprimatur of a large exchange group coming in and adding all the behind-the-scenes elements of clearing and regulation. It's to finally being able to sink your teeth into a listed, physically settled product. That's really what excites you?
Well, it does. To me, it does. I think that's where we're going to take one more step closer to the retail activity, being able to buy the Bitcoin ETF perhaps in the future and sell a call option, or selling a naked put to the downside, a cash secured put, and taking delivery of Bitcoin in a secure, cryptid, custodied account at my local broker dealer. Because we're moving in that direction, Mark. Although it's not a straight line. We're taking fits and starts. But Fidelity, TD Ameritrade, E-Trade, other companies like that are offering custody solutions for regular investors like myself. So we can log into our account. I can buy and sell some SPY. I can do a QQQ covered call, and maybe I'll sell a downside put in Bitcoin or Ethereum. That's where we're going. And to be able to have these as alternative asset classes to me is super exciting, especially as we are in this desperate world of yield. Everybody's looking for yield. We have a 1.6 or 1.7% U.S. 10-year Treasury. We have $16 trillion of negative interest rate bonds globally. Real estate investment trusts, for whatever it's worth, are paying somewhere between maybe 2% to 5%, depending on what type of real estate investment trust you're looking at. And some of the S&P 500 stocks, I'm not going to lie to you, have been beaten down, like AbbVie, Philip Morris, Atria. We have Macy's, which is paying like a 9.7% dividend yield, but that company looks like they're going to go out of business. I mean, they're closing up shops faster than you can name. So, yes, there's some underlying risk out there, but this search for yield and search for trading, search for volatility, we don't see that today, in my opinion. And these type of asset classes like cryptocurrencies are going to be bringing that to not only institutional traders, but to the retail world itself, and a new generation of Millennium and Gen Xers and Gen Zs who are really into this space more than the boomers like you and I.
Boomer. Hey, don't lump me in there with you. I got a few years yet on the boomer side.
Sorry.
Whoa, did I accidentally hang up on you? I'm sorry. How did that possibly happen? But Bill, you said, I think, what is something interesting there, and the magic words, I know for you, and that's certainly, I think, why this resonates for you. I know from experience, you're an old school covered call guy, so these Bakkt products probably make that a little bit more enticing, do they not?
They do. They absolutely do. Because for me, I feel like, personally, I'm willing to take a long-term bet in Bitcoin for a 3 or 5% position of not only my own assets, but even for the assets that I'm managing as a state-registered investment advisor. Of the maybe 70 or 80 accounts that I manage, there's only a handful, maybe 2 of my clients are, hey, Bill, tell me more about Bitcoin. Bill, tell me more about mining. Bill, can we buy some Bitcoin in my 401k or in my accounts? And once we get the blessing of the regulators where I can go in as a limited discretion authority advisor through my own portal at TD Ameritrade, when I can allocate using the iRebalance software within TD Ameritrade, where I can easily allocate to any kind of model I create, whether it's 5% cryptocurrency or 10% cryptocurrency, or maybe it's foreign currency exchange-traded funds against silver, gold, platinum, and the top 5 crypto. I can create any kind of model I want. I can rebalance in a moment's notice. And for me, that's super exciting. And that's where I want to hang my hat. That's what I want. I don't want to take delivery of my client assets. I don't necessarily want to help them with their cold wallet storage solution if I can avoid it. Because I just don't think that that's a fiduciary issue for me, and I want to make sure that I stay on the right side of the table of that.
It makes sense. A lot of people I've seen arguing too that this introduction of Bakkt has been a big driver and is going to be a support for Bitcoin. It's one of the reasons why we popped. They're saying, and of course, that maybe it's going to bring new institutional players to the table. Maybe if that's the case, I could maybe see that argument. I'm not sure if I see this as a huge price action driver. Yeah, I think we have some listener questions about that, so maybe we'll table that conversation until we get to the crypto questions. It's just what a crazy week it is, Bill. We finally get the options. We got Bakkt coming online, and Bakkt isn't even the only crypto exchange, start with B, that's launching this week. We've got Binance, of course, getting some fame/infamy overseas, finally starting to roll out their U.S. operations. It's going to be a bit of a slow rollout, though, so maybe don't get too excited yet. They say they're going to start actually tomorrow trading their old fiat crypto and crypto pairs, including everyone's favorites, Bitcoin, the Binance coin, which just had seen some issues of late, ETH, XRP, Bitcoin Cash, Litecoin, and Tether here with plans to add others as well down the road. Again, I mentioned it's going to be a slow rollout, so the platform is still not even supported. Like, there's 13 states, I believe, they still have to get clearance in, including New York, Florida, and Texas. So some big markets. I'll have to check to see whether Illinois is on that list there as well. Interestingly, we have a state-by-state breakdown for regulation. That's how we've gotten now, the regulation side of the crypto space. But that's a conversation for another day. So we have Binance, we have Bakkt. We have a lot cooking in the world of crypto. Speaking of which, let's see what's cooking in the rest outside of Bitcoin. It's time to get into a little bit of the old altcoin universe.
It's time to move beyond Bitcoin and find out what's moving the rest of the crypto marketplace. It's time to boldly venture into the altcoin universe.
All right, let's get to it. We've already been talking for a while, and it's so much going on in just the world of Bitcoin and related, and certainly a hot week in crypto derivatives this week, which is certainly up our alley. Of course, we'll hit on the altcoin universe now. Let's hit some numbers. Market cap, remember, take the overall value with a grain of salt, but maybe the percentages, I think you can probably take those a little bit more to the bank. Bitcoin, obviously, number one, about 175 billion. Number two, ETH, 22 billion, I should say, was about 12.6%. Market cap. Number three, XRP, 11.14. XRP have an interesting week. We'll get to that in a second. 6 1/3 or so percent. Number four, Bitcoin Cash, about 5.5 billion, puts them a little north of 3%. And Litecoin, number five, with 4.5 billion or about 2.6%. We talked about EOS on the show a couple of times now. They're at about 2.25%, about 3.9. They're right outside the top five at number six. But I suppose if it's only altcoin, you take Bitcoin out of the picture, then they would be the top five of altcoins. So we can get them in through the back door that way. Let's get into some of the action because there was quite a bit of action out here this week. Let's start with ETH. Interesting week out here in ETH. Decent rally actually, up about 17 handles. Giving up a little bit of that now, but about 17 handles from last show. We were at about a 190 last show, and we're at about a 207. Coming into the latter portion of today's show. Our friends over there, Crypto Patterns, they had some somewhat dismissive views of the altcoin space in terms of how it performs on a technical basis, but they've had some interesting analysis, they say here, and ETH is one of the ones they like, as well as EOS. They like EOS as well. And some of their notes as well. It's had the strongest week it's had in months with some bullish sides that it broke over 200 with increasing volume. That's a good sign for them, and also a successful retest of the support. But the red flags for them are that the volume is still relatively low, and current price is fairly strong is at a strong resistance level here. So something to keep in mind for ETH. Ripple, XRP, this is the one. It seems like it's for a brief minute there last week. It seemed like maybe XRP was back. Ripple was back. We've been talking about how long on this show. Remember I said even before we launched this show, XRP was the one that I know a lot of the hardcores, the pros, the traders in Chicago were coming up to me saying, man, this is the one. Ripple's the one. You got to get in on this one. Of course, they had that much ballyhooed run over the $3 handle, then pretty much right back down. And it's kind of been languishing in this level. It seemed like 30 cents was the support. It broke through that, and it seemed like it was slowly drifting down. A lot of tailwinds against it, competing coins, issues in the underlying side of their payment space. So a lot was going on with Ripple. And then last week, just getting a nice lift, rallying all the way back up through the 30-cent handle and beyond, all the way up to 32 cents on the 18th. So a big move in Ripple. And, of course, unfortunately for Ripple bulls, it gave most of it back. It's still up on the week from our last show, so that's a good sign, up over 2 cents. We're threatening about a 28 cent, about 27.90. It was at last show about a 25.90 or so. So up about 2 cents, but unfortunately gave back most of that very, very nice move it had over the course of the week. The folks over there, Crypto Patterns, saying bullish signs are seeing much higher volume than recent weeks and has held on to about half of price increase. That's a good glass half full way to look at it. Held on to about half of it, not that it gave up a good chunk of it as well. Red flags, obviously, were that it pulled back pretty high from its upper moving average, and that's not something that bulls like to see traditionally. But Ripple, is it back? I don't know. I'll let you guys decide. It was back ever so briefly, then maybe not so much here. Litecoin, kind of at least net to net on the week, kind of quiet, up about 2 handles here, and Bitcoin Cash up about 3 handles from last show. Bill, I know there's a couple you like to hang your hat on in the altcoin space. In fact, I think we had, HXRO? We had the gaming guys on your recommendation. They were certainly a fascinating one. What else is on your tape on the altcoin universe these days, sir?
Well, full disclosure, I do own a very small position in the token I'm about to mention. I'm also currently mining this particular token. But again, Mark, nobody really knows in this space. I mean, some of this conversation in altcoins is driven just by friendly conversation, a little bit of rumor. You trust the other person, did their due diligence, and in the meantime, you buy a couple of $100 worth, and then you get around to reading the white paper when you can. But the one that I'm currently liking right now is called Zelcoin, ZEL coin. It uses the same encryption algorithm is Zcash, the zero-proof knowledge Z-snarks type of zero-knowledge cryptography. It's intended to provide 100% privacy and a way of securing their blockchain. And so I kind of like cryptocurrencies that are trying to build community and trying to build an ecosystem. And Zelle came across my desk maybe 10 days ago, and I haven't finished the white paper, which is available at Zelle.network on the HTTPS Zelle network. So you can look at it and see what the coin specs are. But it seems really interesting. Again, I like community. I like people who are trying to think outside themselves from the ICO world. And so this type of token, again, in order for a token to be successful, it has to have the network effect. And where the network effect comes from is by building community and getting involvement and having this circular recycle of I need a coin, I have to spend a coin, or the coin is destroyed while it's being used. So I'm just looking a little bit into it, Kavad emptor, buyer beware. And so that seems kind of interesting, along with Ether. I mean, the first thing I thought about, old-fashioned Ether, was when you had mentioned the Bakkt exchange, and one of the supporters was Microsoft in the Bakkt futures contract. Well, Microsoft already has blockchain as a service library for their developers. They are one of the first founding members of the Ethereum Enterprise Alliance, so the enterprise side of blockchain. I mean, I find that really, really interesting because someday all our stocks, quote unquote, all our securities are going to be a smart contract. So will Microsoft really getting into this Bitcoin physically delivered contract? Is this one more step to learn how to bring securities that are really blockchain solutions and cryptocurrency solutions to the masses? And maybe we're just 20 years ahead of the curve. It's possible. I just find it interesting. Isn't it interesting? So those kind of little projects, again, where community meets a use case, I find really interesting.
Yeah, it's fascinating. That's why I like having you on, Bill, because you always have one of these fascinating little altcoin in your back pocket to share with us here. I'm looking at Zellecoin now. It says, what is Zelle? Zelle is the cryptocurrency that powers the Zelle ecosystem by incentivizing Zelle node ownership to enable the creation of ZelleX and the ZelleDev platform, enabling a truly decentralized development platform. So there you go. A lot of Zelle. There.
Yeah, it doesn't really help much, does it?
Zelle. Zelle is Zelle.
Right. Exactly. And that's the danger, right? And also the opportunity in this space is the God's honest truth, Mark, nobody really knows how this thing is going to unfold. And just like we have the Dow Jones Industrial 30, the OAX, which is the S&P 100, the S&P 500, the Russell 1 and 2000, the Wilshire 5000, we're probably going to be having a conversation in the next few years where it will be the XYZ 30 hedge fund or ETF. It'll be the XYZ with 500 cryptocurrencies in it. It will be the the 1, 2, 3 or whatever with 5,000 cryptocurrencies in it, all with varying types of market capitalization, each with varying types of market activity and daily volume and spread width between the bid-ask. And I think that's just the way we're going. So again, until we spend more and more time trying to come up with real projects and a real user experience that retail investors can hold on to, this is still a highly, highly speculative endeavor, and every single person has to ask themselves not the question, how much can I make on this, but really, can I afford to lose everything? But in the meantime, there's some really cool things and really cool people and really smart people trying to do this. And I find that very exciting and entertaining. And actually, for those who like to read books with really big words in it, George Gilder has a book about Google and blockchain, how they feel Google's days ahead are numbered just because they're a highly centralized artificial intelligence kind of solution, where the future, if you believe George Gilder is a technology futurist, is really distributed blockchain solutions. So I recommend the Gilder book just for those people who have a dictionary next to them to read the book. But again, a very fascinating read on what the future could be, and I think we're in the right space at the right time. But how it all plays out is anybody's guess.
I like those guys who go by futurist. I need to add futurist to my title. It's just a fun-sounding title. But you mentioned the questions people should have. Bill, they certainly have a few for us. So without further ado, let's get into your crypto questions.
You've got questions about crypto. Who doesn't? It's time to find out the answers to your crypto questions.
All right, everybody. Welcome to the Crypto Questions, the segment where the name pretty much says it all. This is where we endeavor to answer your many and varied questions across a broad spectrum of crypto. What is Zellcoin? Why are there so many Zells in the description? These are more of the many questions you guys have. Let's start off with a question here from Big Nick. Big Nick wants to know, this is kind of what I was alluding to earlier. He asks, is the Bakkt launch a bullish factor for Bitcoin? This kind of tends to break down on how you view Bakkt and what they're doing here, right? Because I think if just on its surface, a new player, actually remember back to when CME entered the space, everyone viewed it as a bearish factor for Bitcoin. Because at the time, Bitcoin was kind of viewed as a bit of a roach motel. You could get in, but you couldn't really get out. The futures allowed shorting, and all of a sudden, there you go, an exit point. See, a new liquidity pool to be able to sell some of these contracts all of a sudden. So a lot of people point to that as maybe one of the reasons why we hit that top. So a new venue coming online doesn't necessarily mean bullish price action. Bakkt, though, is a little bit of a different story. It's a new thing. Bill obviously mentioned there's a lot of new use cases you can use with the physically settled. Things like covered calls, arbitrage, dispersion, all these things become much more viable when you have a physically settled and deliverable type of contract there. So that's certainly interesting. I think the wild card, at least for me, and Bill, I'd be curious to hear your thoughts as well. The wild card for me is that physically deliverable side of the contract, is that enough to lure the big institutions? I mean, I was talking about the big numbers I saw this week from trades. Talk about 150 and 100. We're going to see the guys hitting the 10,000 lots out there. Is that really coming as a result of Bakkt? I think that's the big question. If we see that, then it potentially could be. I don't know if we have the evidence for that now. But Bill, you sound like you're pretty bullish on this. Do you think this launch of Bakkt and their new contract, is this a bullish sign for Bitcoin going forward?
Boy, that's a great question, Mark. I'm not sure if I think I'm pretty agnostic as to whether it's bullish or bearish for Bitcoin. You know, part of me believes that of the 21 million outstanding Bitcoins, we have maybe 18 million already mined. That leaves roughly 3 million out there to be mined. We have a Bitcoin halving shortly, so there's going to be fewer and fewer Bitcoin rewards received every 10 minutes. So I think that those factors, myself, the Bitcoin halving and those items tend to be more bullish for Bitcoin, in my opinion, than whether we have a physically delivered, physically settled futures contract. Although I think it is a bullish factor. I think, once again, as we begin figuring out the custody issues, it'll drive more and more institutional adoption. And certainly there was an old book, Who Moved My Cheese? And the part of the book that I walked away with is the first mouse doesn't get the cheese. And so while Bitcoin, in my opinion, is certainly the most successful first mouse that's out there, maybe it's also a beta test of how to do custody, how to settle issues, how to make sure that everything runs smoothly and cleanly, almost automatically with software, rather than the back office. When you and I were on the trading floor, we had hundreds and hundreds and hundreds of people responsible for clearing and for settling trades and making sure every trade hits the correct account at the right price. So again, these things have to move seamlessly, flawlessly, automatically. It has to flow through the custodian, the CME group. There's margin issues. So I just think that Bitcoin, again, this launch is neither bullish nor bearish. I think it's maybe marginally bullish, but there's other factors that are at play that we need to keep in mind.
Now, I've heard that point brought up before, that Bitcoin is maybe a bit of the vanguard here. It's going to suffer the slings and arrows from the regulators and from the institutional side. It's going to suffer the brunt of all of that and kind of take the heat and maybe pave the way a bit for some other altcoin, maybe one we haven't even heard of yet, to really rise to prominence as a result. So interesting outlook. We'll see. I think we're kind of mixed here, Mr. Big Nick here. I'm not personally yet. I'm still waiting to see. I mean, look at the numbers I just quoted from CME. After all this time they've been doing, they have 56 large institutions. Now, granted, one big institution could do a lot of size, so it's not the same thing as 56 individual retail customers, but still, we need a lot more firms to really get on board. And maybe the physically deliverable contract is the inflection point, but I'm not quite there yet in terms of I got to go out and run out and buy Bitcoin right now as a result of this announcement. Let's see here. Serials wants to know, Bill, the people are never happy. We finally get them options on Bitcoin after 2 years, and they already want more. Serials is asking, what about options on altcoin? Hey, I'm with you. I want all the options on everything, too. It's in the name, right? Options Insider. We're here for you. But we just don't even have them yet. We could have another 6 months to wait before we have the options on Bitcoin. So I'm happy that we heard that. I would like to hear. I wouldn't be mad if CME come out tomorrow and said, "Hey, here we go, a bunch of new futures and options on them." I don't see that happening. So I think we have to wait for some of these other venues. Maybe if Bakkt takes off, I have to imagine it's going to take them a little bit less time than 2 years to announce an option on their contract. But I think we have to wait for these options to really start picking up some steam and actually get listed on the Bitcoin side first. And then we're going to start seeing it. Because I know you want options on ETH. And we talked about there is a decent little OTC market for that. So ETH obviously clear number 2 to Bitcoin out there on the options side. But as I've said before, I mean, even this past week in Bitcoin, it wasn't a huge volume week. So ETH's going to be less than that. So we need to get some of these other altcoin doing a little bit more paper first, I think. And that'll probably help. I don't know, Bill, what do you think? Our audience, they always want more, sir. They just get the announcement of Bitcoin options and they already are moving on. They want Zelle options, sir.
As I'm looking at my screener, I can see at least a dozen altcoins whose price is trading much lower than any kind of call or put option would be on it. So options have a limited life, and cryptocurrencies, I would say, are theoretically have a very long shelf life. Tongue in cheek in a way, but Cardano, Tron, Stellar Lumens. I mean, these are cryptocurrencies you can buy for 6.5 cents or 4 cents or a penny and a half. What's the point of having options on something that only costs less? Costs less than 2 cents. So just buy your fill of what you are willing to lose and put it away, and hopefully, Christmas morning and 2034, you'll wake up and these things will be trading, way above their old all-time highs, and you'll be sitting pretty. But until then, I'm not quite sure, having options on some of the altcoins is really a prudent thing at this time. Maybe down the road, but not right now. You
don't want an option on a 27-cent XRP bill? It doesn't get you excited?
I can't make a market in that. Not enough profit in that.
Yeah, that's a rough one. And you're right. Just from a pure price action perspective, there's only a handful. Obviously, ETH falls into that category. Bitcoin Cash, both of them in the $700, over a couple $100 range, several $100s, and Litecoin at about a 72. So just from a pure price perspective, a little in volume, you're already getting out 95% of the universe right there. CVTY wants to know, do you think CME launched Bitcoin options to steal some thunder from the Bakkt launch? Well, I was joking at the top of the show. I said it was all me. It was only 90% me. I think it was probably 10% the Bakkt as well. I don't think it's a coincidence that these announcements and the launch came within a week or a few days even of each other. I think maybe they were keeping that powder dry on that and holding on to that announcement so they would have something to talk about as well when the news cycle was inevitably pointed away toward what Bakkt is doing. So this will not be the first time we've seen ICE and CME kind of jousting and tilting at each other. I don't think it's going to be the last. Yes, I think there probably was a little bit of a timing coincidence there. What do you think, Bill?
Yes, these exchanges have to compete with each other, no doubt. Each exchange serves a different clientele, and they'll be continuing that design for the foreseeable future. The CME group definitely being the institutional, and the Bakkt exchange /ICE / New York Stock Exchange has always been more of a retail driven. Maybe 50-50, right? As investors buy stocks in their 401ks, as pension plans own the S&P 500 and other exchange traded funds and the stocks themselves. So, yeah, there's a competitive, but you know what? We also have a reputational risk here. So the first exchange that embraces a cryptocurrency solution and fails, that's an issue that costs a lot of money, more than the regulatory burden. So they have to go slow, do the best they can, make sure that the product is bulletproof for investor protection, and compete with each other like entrepreneurs. So it's almost an impossible task for some of these exchanges, and I applaud all the work that they do.
All right, let's end on a fun and indeed a silly one. Crescent City Trader sending in it's like a little gif of reimagining the old line from, what is it, Fast and Furious. I forget the name of the character, Vin Diesel's character. I think he said in the movie, I live my life a quarter mile at a time. He tweeted in an image of him saying, I live my life a quarter Bitcoin at a time. I like that. That brought a smile to my face. Don't we all there, Mr. Crescent City Trader? Don't we all? All right, unfortunately, that music means we come to the end of another epic sojourn. Bill, you picked yourself a good one. A lot popping off here in the world of Bitcoin. We could have filled several hours with all this goodness out there. But unfortunately, that music means we come to the end. Before we go back around the horn. Let me check in with Bill. He's got a lot of stuff going on in Cenacle and in Athena and everything else. Mr. Bill, what's cooking in your neck of the woods, sir?
Well, at Athena, again, it's the Chicago's first co-working space dedicated to the blockchain information and to that flow of information that happens within cryptocurrency in the blockchain space. So for those people whose antenna has been raised by the massive WeWork co-working conversation and the recent failed IPO, Athena Trade offers some very, very quiet place to work, but also some robust conversation that goes on intermittently and spontaneously during the day. So for those people that are interested in looking for a affordable solution for the co-working space and want to be in blockchain, Athena Trade is really a great place to take a look at. And it's by Bitcoin, by cryptocurrency traders, for traders, and for those people in the space. So it's a great space run by wonderful people.
I don't know if you want to invoke WeWork too much these days, right? It's kind of persona non grata out there.
Sorry, I know.
Even the CEO getting asked to hit the bricks after this failed IPO. So let's say you're co-working a lot better, a lot less assaults going on, drunken assaults going on in the Athena HQ. Sure. And of course, anything cooking in the land of Cenacle, sir?
Well, actually, our clients are still looking for income-based solutions. So we're looking at more dividend-based companies that have been beaten down. You know, the AbbVies and the Philip Morrises and the Caterpillars and other companies like that. We think that there's some really great opportunity because everybody is focusing on the growth side of the equation, much like it was in 1999 and 2000. And ignoring some of the great value opportunities that are available for your 401k and IRA. So we're putting together some really interesting strategies for some of our clients looking to exploit some of these companies that have fallen out of favor, but are very high dividend-paying companies.
There you go. Check them out. He's at Cenacle Capital over there on the old Twitter machine. And on behalf of Bill and, of course, myself, I want to thank all of you out there for downloading, streaming, subscribing, sending in such great comments and questions and gifts and all that fun stuff. Keep them coming. And we'll see you back here throughout the rest of the week. So many different shows on the network for you guys to enjoy. Check them out. And we'll see you back here next week for more of the Crypto Rundown.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC.